Hi there, trading friends. It is Thursday, October 22nd, and your cherry bomb trade is in for today. Amazon. So we went from Google to Amazon. We hit a couple of big tech giants in the past couple of days, and I think something went fishy yesterday with that Google trade because in 6 minutes I made $470. That's pretty good. But I think that might have been a little paper trade magic going on there. But anyway, let's see if we can pull out some really cool magic today. But it's not looking like that's going to be the case. So anyway, let's do our trade overview. Amazon, we're going to be putting a short put vertical on, right? So we're going to be taking more risk than we have the potential to make, but we're going to get better probabilities to do that. And that's kind of the trades that we like to make here following the tasty trade mechanic. Amazon is not a particularly liquid underlying. You can see that it only has a rank of 2 out of 4. Its IV rank is 68 right now, and its IV percentile is 87%. So you should be expecting to see that volatility drop if 87% of the days in the past year have had lower volatility than right now. That being said, earnings are due 1 week from today. So if you don't want to trade through earnings, you might want to wait till after that one, but you will potentially experience a lot less volatility crush. All right. So if you think that Amazon is a trade that you might want to put on in your simulated trading platform, or perhaps your real one, but I'm not giving you that advice, then this is a video for you. Hi everybody, my name is Neil and this is Option Theory. I want to thank you so much for clicking on this video and making it this far, right? So we're going to build out that trade, but I just want to introduce myself like I just did and let you know what we do here. So in these cherry bomb trades, we get emails from Tasty Trade. And if you want to sign up to receive Tasty Trade's emails, head on over to their webpage. There's a link down below. You can sign up for their Tasty Trade email web blast there. I do not get any sort of kickback from them or whatever. Just think it's a great thing for you to have in your toolkit as well. Just like ThinkOrSwim. We use ThinkOrSwim because they offer simulated trading, right? Many of us also trade in real, funded accounts. I do as well using ThinkOrSwim and also in Tastyworks. So you can see we have our portfolio pulled open right here. We use both the margin and the IRA accounts, but even though you don't see it, we already closed out. Monday we did, or actually it was supposed to be Monday, but I did it on Tuesday, is a viewer suggested trade. So if you have an underlying you'd love to see traded, maybe it's a company you used to work for, right, or whatever, send us a ticker. You can do so in the comments of any of our videos or head on over to optiontheory.com/contact. Love to hear from you. Let's move on. Let's do what you came here to see, right? We're going to go over the ad simulated trade. We're going to be in the December monthly expirations. That should help liquidity some. But if you look at the width of these bid-ask spreads, right? $1.55, $2.55 width on this one, right? And we can see that for whatever reason, they're not showing a lot of open interest. I'm not sure why that is right now. But if you go to Tastyworks, there is some open interest, just not as much as you'd probably see. But we're going to be doing a short put vertical. So we're going to be, as you can see on screen, we're going to be selling the 28.50 and then capping our risk as a $10 wide vertical spread by buying the 28. Let's left click on the 28.50, hold down the control key, and then click on the ask the 28.40. So left click the bid on the 28.50, control left click on the 28.40 ask, and you'll have yourself down here a credit spread, right? That we're using one contract wide, and make sure yours is the appropriate number of contracts that you feel comfortable with, right? Knowing that it's $10 wide times 100, you're looking at a width of $1,000 minus the credit that you received on this one. I think this credit's going to be going up because if I take a peek at this drawer over here on the left side, we can see that we're trending down on the screen here, where all of the major indices here, S&P, NASDAQ, Dow, and Russell are all in the red. So there's a chance this is going to be popping up on, we would collect more of a credit on this one. And though our probabilities would go down. And that's true, because if you look at the probabilities now in Tastyworks versus the email when it was generated, right, they have come down some. So while we're talking about risk, of course, because That's what we do in these videos. After we build the trade, we take a quick analysis of it. Let's head over to this risk profile and make sure our date is set over here and to expiration, which we can see over here. And then I try to get this expected move stretched out a little bit so I can see just to the edges of it. And we see when I get this price slice here, which I do by hitting this menu, go to set slices, break even, and at expiration. There we are. We're looking at a 66%. According to ThinkOrSwim, a probability of ending on or to the right of this line. Right? I think our probabilities are a little bit different. If we head on over to Tastyworks, we can see over here, trade, we're looking at a 68% rather than 66%, but the P50 is a 76. The email that you received was a 79%, which is a nice number. So probabilities have come down some. That's probably because the market's coming down. This one's a tough one. You know, this is, you know, 5 times the risk I'm normally taking, right? Usually risking about $130, $140 on a trade. So, you know, not my favorite. And I've been burned by some Amazons before. Let's take a look at that. I think I have. I'm pretty sure I have. Let's go back over here. Account statement. Yeah, Amazon owes me some money. So, right? Let's go and see if we can get Amazon to give us most of that back, right? Or at least half of that back. All right, so I'm going to right click this trade and we're going to go over and see, once again, our max profit's $300. We're going to look to manage that. Should it fill today, we'll set a good till canceled order to take it off when it is worth $1.50, right? Less. So let's go down over here. Max loss is $700. That's what we're looking at. The probability of us making a profit, there it is. And then the probability of us making half of that profit is 76%, somewhere in the next 57 days. I'm going to go ahead and hit send on that one. That's going to put that in my working orders right here. And we'll pay attention to that when the market opens. Hopefully you have an alarm set on your phone so that you know when the market opens, you can just pop open maybe your mobile app, right? And I was wondering, did you guys want to see me do some trades from the mobile app? I haven't quite worked out how I would do that other than recording it on my phone. Kind of have an idea that I might be able to use Zoom to do it. But anyway, let me know in the comments. You interested in seeing some trades built using the ThinkOrSwim mobile app? I'd love to hear from you. All right, everybody, if you've made it this far into my video, you always get a thumbs up from me because I appreciate that you stuck around till the end. It means a lot to me. If you think that I've earned a like, I would love it if you hit that like too. And should you want to subscribe, that's great. I'm going to keep doing what I do. Hopefully you will hit that subscribe button and ring that bell because you'll be notified that our videos have come out, which they tend to come out right about the time that the US markets open, right? All right, everybody, until I see you tomorrow in our final cherry bomb trade of the week, best wishes and happy trading.